Hello students and welcome to the lecture. So students, as we know that we are covering the financial system and basically since last two lectures we had started the discussion over the mutual funds. So far we have discussed about the mutual funds in a detailed way. I hope that you have revised the previous lectures in the well enough manner before you have come for this lecture. Okay. And these are the topics we have scheduled for the discussion under this series. Like we will start with the introduction. Okay. Then the basic history, then the growth of mutual fund industries, types of mutual funds, regulation, investors' participation, and the conclusion. Okay, these are the topics we have scheduled for the discussion. Out of this, basically, we have finished the introduction part. We were discussing the basic history, right? And the topics we are left with is the growth of mutual fund industries, types of mutual funds, regulations, investor participation, and the conclusion. Okay, so I hope that you have revised the previous lectures as I had told you before in the starting of this lecture. Okay, so basically in the previous lecture we had you can say finished till here, okay, and even here about the SABI. Now let's see this. Basically over the years the mutual fund industry in India has witnessed a significant growth both in terms of asset under management and the number of schemes offered. Okay, so what is the meaning of AUM? Assets under management. What is the meaning of this? And number of schemes offered. So here we have find two words. Now we are required to understand them separately. Okay. So let's first discuss about the AUM. Okay. Assets under management. Okay. So what is the meaning of this? So if we you can say go with the formal meaning or the formal definition, then basically it stands for total value of assets managed by an entity or a person on behalf of client. So this is the formal definition, that the total value of the assets managed by an entity or a person on behalf of client. This is known as the asset under management. Okay, so if we try to understand this, so suppose there are total 6 fund members, right? Okay, these 6 fund members and then call Mr. X in between. Okay, and the total price is rupees 10 lakh. This is the total amount they have, you could say, arranged. All right. So this 10 lakh is the total asset they having. Not total asset, sorry. Total amount they are having. Okay. But suppose out of this 10 lakh, 6 lakhs they had invested into the securities, shares, the bank deposits and all, and the remaining 4 lakh they have you can say kept with them. Okay, so this 6 lakhs will be the total AUM. Okay, and this 4 lakh will be the reserved. All right, so that's how the things works. 6 lakhs is the total assets under management by the Mr. X on behalf of the 6 fund members or the clients. Okay, total amount, fund members, reserve, and all. So this is called the assets under management, when the total value of assets managed by an entity or a person on behalf of the client. Okay, so basically if we look at this, then what we are seeing, that over the years, or you can say after the 2014 onwards, when the direct plan was introduced, okay, the assets under management or you can say the assets management companies, the number of them are on the high. Why? Because more and more schemes were introduced into the market, more and more participants were, you can say, involved in the mutual fund industry. So as a result, both the things grown. Today, mutual funds in India offers a wide range of investment options, including the equity funds, okay, debt funds, hybrid funds, index funds, catering to the diverse needs of the investors. About this, we will see in the type of mutual funds. All right. So these are the areas. Okay. Now you could see that basically it was established as a money pooling scheme, right? With the establishment of Unit Trust of India. Okay. Also known as UTI. Okay. With the establishment of this, it is basically established as a money pool scheme. But over the period of time, it has been transferred into the, you can say, very broad base of the industry. Like nowadays, it is not only just a money pool scheme, but it is dealing in the equity funds, debt funds, hybrid funds, index funds, and basically it is designed as per the way that it is catering to the diverse need of the investors. Okay, like you are not required to just give your money, take your interest and all, but you could diversify your portfolio in it. The industry has played a crucial role in mobilizing savings, channeling funds into the capital market, and the promoting a savings and investment culture in the country. Why? Because those who having the less amounts, okay, and for those who wanted a high return but low risk series, okay, these peoples have getting a chance to mobilize their saving because only the less amount they are required to contribute thereafter. As we know that because the mutual funds are basically used to buy the diverse range of securities and the shares, so that's why the promising returns are usually high and low risk. Why? Because not only your money is in the, you can say, the security, others money as well. Okay, so whenever there will be a condition of the loss and all, so the things will be divided on everyone equally. Okay, it also brings the fund to the capital market. Why? Because more and more people are you can say facilitated to participate into the investments, to participate into the money pooling. Okay, so there will be a cash flow or you can say the liquidity flow to the capital market by this one. Okay, investment culture, it means that usually the people in India were more focusing on savings. Okay, on savings. For example, suppose if we talk about any person, suppose this one. So if he having rupees 10,000 in excess or you can say in savings. So what will happen? He will keep it as it is. Why? Because either he is not having the enough amount to invest in the shares and securities, or he want to avoid the investment and the risk associated. Okay, but due to the mutual funds, now he is able to you can say invest even in the lesser amounts, and second to having the high returns and the low risk. Okay, so that's why the people, if nowadays we talk about them, if he's having 10,000, so what he will do, he will invest the amount into the mutual funds. Okay, and gradually due to the returns the amount will be increase and maybe up to reach 15,000, okay, 20,000 and whatsoever, right? So this is the basic history. I hope that you have gone through the basic history into the full form. Okay, we had discussed many things about it. Now what is the growth of mutual fund industry? We are required to look at this. Like we had seen that there were cycles from 1963 to the 1987, 1987 to the 1993, okay, then 1993 to 2003, from 2003 to 2014, right, and from 2014 onwards. Okay, there were many cycles. Okay, and in these cycles basically we have seen that there was the evolution. Like first the UTI was there, then the public institutions starting participation. Okay, then we had seen the private institutions also came forward. Okay, then we had seen the new fund offer was introduced on terms of like the IPO. Then we had seen the direct plan was introduced to counter the regular plan. Okay, so how all these things work? These things works because of the evolution, right? Over the period of time the things will change. Sorry, the things were changed, and because of this we have to see these kind of things. So first thing which we are going to see is the assets under management, AUM. The asset under management of the mutual fund industry in India have grown significantly over the years. This growth can be attributed to the several factors. So basically what is mean? Suppose if we're talking about the mutual funds. Okay. So the assets under management. Okay, it means that how much of the mutual funds involved into the securities market and how much of the assets, or you can say what worth of the assets have been purchased. So suppose if we're talking about the 1963, then only, for example, only rupees 400 crores were invested into the market. It means that the assets of 400 crores were under the management of the fund managers. Okay, then suppose we have talked about the 1993, because the market was grown, because the awareness was grown. Okay, so suppose the amount was reached rupees let's say 10,000 crores. Okay, it means that nowadays the mutual funds basically own the shares and the securities of rupees 10,000 crores. Okay, thereafter let's talk about 2010. Due to the further growth, support rupees 40,000 crores. Okay, is now the total amount which have been invested into the shares and securities market through the mutual funds. So what we are seeing? We are seeing that in 1963, that was the value of AUM. Okay, it means assets of worth rupees 4,000 crores were under the management of the mutual fund industry. Then in 1963, the asset under management amounts up to rupees 10,000 crores. Thereafter, in 2010, the value has reached up to 40,000 crores. What you are seeing? We are seeing that there is a tremendous growth. Okay, the graph is going high and high and high. All right. So This is the thing. This growth can be attributed to the several factors. And what are these factors? Let's see. Increasing investors' awareness about the benefits of the mutual funds investments, such as professional fund management, diversification, and the liquidity. Okay, like if we talk about the three main factors, like here, we could see the first is the fund management. Second, we could see is the liquidity. Third, we could see is the diversification. Okay, so if we look at this, then what are the possible, you can say, the doubts and possible thoughts could come into the person's mind? What kind of? So let's start with the first one, which is the fund management. Suppose the fund is of rupees 10 lakhs. Okay, it means that rupees 10 lakh is the total worth of the fund. So the investors who have invested their money, and you can say the new investors who is thinking to you can say pool the money in this 10 lakh rupees and then invest it into the shares and the securities. So first thought he maybe get is that who will manage the fund? Like, how do we able to recall that this particular security, that particular share is beneficial for us or not? What if the particular share in the security was not beneficial for us? So that basically you can say raises the concern over the professional knowledge. It means that the investors who have invested their money into the mutual funds, there are chances that they might be not aware about the functioning, they are not aware about the trading and the techniques of the share and the security market. Okay, so how will this fund will be managed professionally? That could be the first you can say thought. Second is the liquidity. It means that suppose you have invested your amount into the mutual funds and the mutual fund has been invested into some security. Okay, but now you want to withdraw your amount. You are no longer want to you can say participate into the fund. Okay, you want to just take your money back and go to your village and do some farming. Okay, this kind of example. So how you will be able to take your money back? Okay, how you will do it? So that's how called the liquidity. Liquidity basically stands for the withdrawal and entry. Okay, like how could you easily enter into the fund and how easily you could withdraw your money out of the fund. Okay, so nowadays we know that the liquidity is basically essential feature of the mutual funds. How we will just see. Thereafter, the diversification. Diversification means suppose you have invested your money into the this fund. Okay, and there are three securities. For example, security X, security Y, security Z. Okay, there are three securities. So fund members wanted to invest into these securities, means security X and the security Z. They wanted to invest in them, right? But security X, or you can say security Y, basically the security Y is left. All right, and you as a fund member, you wanted to invest your money in the security Y. Okay, it means that you are looking for diversification. It means that you want to diversify your fund. You are no longer wanted to invest at the place where the other fund members are investing in. Okay, so that's called the diversification. All right, and this is nowadays basically you could say possible because of the provisions of direct plan. It means that by using the direct plan, you could easily diversify your security, sorry, your fund. Okay, so if we talk about it, then we know the fund management doubt resolved because the professional fund managers are there who manages the fund, okay, for the clients. Liquidity, we know that if anyone wants to enter into the fund, then by joining the new fund offer, he could easily enter. If anyone wants to withdraw his amount from the fund, then he could easily do it. Second, or the third, sorry, if anyone wants to diversify the, you can say, the investment, the person is not willing to invest in the same securities in which the other fund members are looking for, then he could directly diversify the amount. He is no longer required to do it with the to do it with the distributor and giving distributing fees. Okay, as per the which plan? Regular plan. Because we know after 2014, nowadays the customer is eligible to use the direct plan technique. Okay, so that's what we had seen. Okay, so that's how the investors' awareness and their courage have been increased so far. Okay, favorable market conditions and economic growth which have led to the higher investment in the mutual funds. Okay, because if we talk about the mutual funds, then mutual funds are you can say, suppose there is a collective investors, or you could call as a fund members. Okay, these are the peoples, they all have invested, or you can say they all have merged the fund together and made the mutual fund. Okay, so basically they all are entitled to get the returns. Okay, but from where? From where the mutual fund will be eventually, you could say, will be invested into the securities and share market. Okay, in the securities and the share market, eventually the fund will be invested. The returns which will be earned from here will be distributed as per the fund contribution or fund proportion. All right, so this is the main thing, like favorable market conditions. Okay, so you could say that after 2014 onwards, okay, Indian share market has been on continuous rise, right? Because of this, what we are seeing? We are seeing that more and more people are attracting towards the share market investment. Okay, because they are looking for the highest returns which are receiving by the others. Okay, so and if they are the people who want the high returns but the low risk, so these people are basically participating to the mutual funds, because eventually the mutual fund is going to be invested into the share market. Systematic investment plans, or the SIPs, which have the gained popularity amongst retail investors as a disciplined way to invest in the mutual funds over the long term. So what do you mean by the SIP or the systematic investment plans? So basically, you could say that this is the investment plan. About it we will see in the upcoming slides. Till then, just remember the SIPs are basically the revolutionized. Okay, let me read it again. Revolutionized way of investment calling. Okay, it is the revolutionized way of investment calling because it has helped many investors or the retail investors. Okay, there is a two terms, basically just understand them before we go further. Okay, retail investors. Okay, thereafter come the wholesale investors. Who they are? So remember, retail investors generally small investors who having part-time interest into share market. Okay, invests low amount into the share market. Okay, thereafter if we talk about the wholesale investors, then who they are? Generally large investors who having main profession or interest into share market, invest huge amount into the share market. Okay, so this is the thing. Like retail investors are generally, you could say that these are the small investors who having the part-time interest into the share market. It means that like me and you, the people who having their other professions, who having their other responsibilities, but for the side income, for the additional income, we are generally participating to the share market. We are performing the buying and selling of the shares and the security. Invest low amount into the share market. Why? Because we are not the professional investors. Okay, we are not the one. We having the small savings, we having the small amounts which we want to invest into the market and earn the interest. Then we have the wholesale investors. Generally, they are the large investors, or you can say the large corporations and the investment firms who having their main profession or they having their main interest into the share market, invest huge amount into the share market. Like suppose if we're talking about the retail investors, then maximum 2 lakh, 3 lakh, 5 lakh, even 10 lakhs. Okay, about this we could invest. But when we talk about the wholesale investors, generally they having the investment in 100 crore, 200 crores, 500 crores, 1000 crores. This one, because they having the huge capital, they having the huge liquidity which they could infuse into the share market in comparison with the retail investors. Okay, so basically when we talk about this, the systematic investment plans or the SIPs, they are especially, you can say, designed for the retail investors who do not having the huge money to infuse into the share market. Okay, but to ensure their participation, basically providing them a view, or you can say the providing them a way through which they could invest into the market, the SIP system was introduced so that the retail investors who having the you can say the low capital, who having the low money, they could also participate. So please remember the retail investors and the wholesale investors definition. That will be coming in the future slides also. Okay, so students, basically in this lecture, just finish the AUM first, then we will say goodbye. Regulatory reforms and the investors-friendly policies by the SEBI, which have instilled confidence in the investors and promoted the transparency in the industry. Okay, so students, basically in this lecture we have finished till here. In the next lecture we will continue from here. Till then, just revise all the facts and figures we have discussed in this lecture. Be ready for the another lecture. With this note, let's end this lecture, and what we say thank you.